Financial literacy, essential money management skills. The capacity to properly manage one's finances requires one to be able to make informed decisions on budgeting, saving, investing, debt management, and risk management. This ability is referred to as money management abilities. To obtain long-term financial goals and achieve financial security, these abilities are necessary. The importance of teaching children how to manage their money. Having the abilities necessary to manage one's finances is essential for persons who wish to preserve their financial security and realize their monetary objectives. By learning these skills, individuals can gain the agency to make educated decisions about their financial situations, which is beneficial to their long-term financial well-being. Individuals must be taught skills in money management for them to be able to navigate their daily lives with financial stability and success. It entails learning how to efficiently manage money, including creating a budget, saving money, investing money, and managing debt effectively. The development of these abilities enables individuals to make educated decisions regarding their finances, steer clear of financial difficulties, and plan for a financially secure future. In addition, imparting knowledge on how to effectively handle one's financial resources is essential to the expansion of the economy, the alleviation of poverty, and the expansion of financial literacy within society as a whole. Components crucial to efficient financial administration. The process of building a budget. The process of building a budget is the process of creating a plan to distribute income and expenses to ensure that critical needs are satisfied and financial goals are attained. It assists people in setting priorities for their expenditures so that they can avoid overspending and living beyond their means. A person can lower their financial stress and save money at the same time with the help of a budget. To save. The practice of putting some of one's income away for use at a later time or in case of unexpected expenses is known as saving. Putting money aside for the future can be accomplished in several different ways, including opening a savings account, a retirement account, or an investing portfolio. Individuals can construct a financial safety net and make progress toward their long-term financial goals through the practice of saving, which is a fundamental component of efficient money management. Making an investment. Investing is another essential component of efficient management of one's financial resources. It entails investing money in a variety of assets or businesses to increase wealth over time. Investing can be done in a variety of different investment vehicles, including stocks, bonds, mutual funds, real estate, and others. Investing is a long-term endeavor that demands thorough preparation in the form of study and analysis, and it has the potential to generate big profits. Administration of debt. Effective management of one's debts is another crucial component of one's overall financial situation. It entails managing existing debts efficiently and making well-informed decisions regarding the incurrence of new debt. Managing debt involves several different steps, including the formulation of a repayment strategy, the establishment of a debt hierarchy, and the avoidance of high-interest debt. The management of risk. The practice of detecting and minimizing potential monetary hazards to safeguard an individual's assets and income is referred to as risk management. The creation of an emergency fund, the purchase of insurance, and the diversification of investments are all components of risk management. Individuals can safeguard their financial futures and prevent large financial losses if they actively manage the risks associated with their finances. Acquiring a solid knowledge of financial matters. Around the year 2000 and continuing through 2022, an increase in the use of financial products and services has been observed throughout society. Earlier generations of people living in the United States may have been more likely to make most of their purchases using cash. However, other forms of credit, such as credit and debit cards, as well as electronic transfers, are now very common. In a survey conducted in 2021 by the Federal Reserve Bank of San Francisco, it was found that credit cards were used for 28% of all payments, while cash was only used for 20% of transactions. Due to the prevalence of finance in today's society, a lack of financial literacy on the part of an individual can be extremely detrimental to their chances of achieving long-term financial success. Despite this, studies have shown that a large percentage of people are financially illiterate. In fact, the Financial Industry Regulatory Authority, FINRA, estimates that this problem affects 66% of all Americans. Being financially illiterate can put a person in several precarious situations, such as increasing the likelihood of amassing unmanageable debt burdens as a result of making poor spending decisions or a lack of planning for the long term. This in turn can lead to poor credit, bankruptcy, the foreclosure of housing, and a variety of other unfavorable outcomes. Those who are interested in educating themselves about the business of finance may, thankfully, today choose from an unprecedented number of available materials. One such organization is the Financial Literacy and Education Commission, which is supported by the government of the United States and provides a variety of free learning tools. The importance of being financially literate. Literacy in financial matters is essential for the management of these aspects, whether one is looking at short-term or long-term budget projections. It is crucial to plan and save enough money to provide an acceptable income during retirement while avoiding high levels of debt that could result in personal bankruptcy, defaults on loans, and foreclosures on homes. According to the Economic Well-Being of U.S. Households in 2020 report published by the Board of Governors of the Federal Reserve System in the United States, a significant number of people living in the United States are not well prepared for retirement. More than 1/4 of respondents reported that they do not have any funds for retirement, and fewer than 4 in 10 of those who are not yet retired believe that their retirement savings are on the right track. More than 60% of those who make self-directed retirement savings have reported having poor levels of confidence in their ability to make decisions regarding their future. According to research conducted by the TIAA Institute, a lack of financial literacy has rendered the millennial generation, which makes up the greatest share of the American workforce, unprepared for a catastrophic financial crisis. Even among individuals who self-report having a high level of understanding regarding personal money, just 19% of respondents answered questions correctly regarding core financial concepts. 43% of respondents said that they have used more expensive alternative financial services such as payday loans or pawn shops. More than half do not have an emergency fund large enough to cover the costs of living for 3 months, and 37% are financially fragile. Financial fragility is defined as the inability or unlikely ability to come up with $2,000 within a month in the event of an emergency. Millennials also have significant amounts of debt from school loans and mortgages. In fact, 44% of millennials believe they have an excessive amount of debt. Even though they may appear to be personal issues, they have a greater impact on the general community than was previously thought. There is no need to look further than the financial crisis of 2008 to observe the financial impact on the entire economy that resulted from a lack of understanding of mortgage products, which created a vulnerability to predatory lending. All one needs to do is take a look at the crisis. Literacy in financial matters is an issue that has many repercussions for the economy's overall health. The value of being financially literate. The ability of individuals to make more informed choices is one of the many advantages that come from having a solid understanding of financial matters. To be more specific, having a solid understanding of financial concepts is essential for a variety of reasons. A solid understanding of finances can help one avoid making these catastrophic errors. There is a possibility that the interest rate on a floating rate loan will change every month, but contributions to a typical individual retirement account (IRA) cannot be withdrawn before the account holder reaches retirement age. Even the most innocuous-looking choices a person makes with their money may, in the long run, have consequences that cost them money or alter their life plans. Individuals who have a solid grasp of financial concepts are less likely to make costly missteps with their own money. Financially literate people are better prepared for unexpected events. Individuals who have a strong financial literacy can better handle the unpredictability of their lives by focusing on conserving money and being prepared for emergencies. Even though the loss of a job or incurring a significant unanticipated bill will always hurt one's finances, an individual can mitigate some of the negative effects by putting their financial literacy skills into practice in advance and being prepared for unforeseen events. Individuals can be more successful in achieving their objectives with increased financial literacy. Individuals can make plans that hold them accountable for their financial situation, set expectations for them, and set a course for attaining goals that may appear to be impossible if they have a better understanding of how to create a budget and save money. A person can always establish a strategy to boost their chances of having a desire come true, even if they do not currently have the financial means to make their dream a reality. The ability to manage one's finances instills confidence. Imagine having to make a decision that will have a significant impact on your life without access to all of the information you require to make the right choice. Individuals can approach significant life choices with better confidence, knowing that they have a lower risk of being surprised or negatively influenced by the consequences of unforeseen events if they are armed with the right knowledge about finances and are aware of how this knowledge will affect them. Do you like it? Kindly give your valuable response in our comment section below, and don't forget to subscribe to our YouTube channel for more interesting and informative videos.